Welcome to this explainer. A lot of folks think the trucking dream is just, well, grabbing the keys to a big rig and heading the open road. And it's an incredible dream. But today, we're going to dive straight into the harsh reality. Because right behind all that freedom is an absolute mountain of legal alphabet soup, hidden costs, and strict compliance metrics that can literally ruin your launch if you aren't completely prepared for them.
Okay, so here's our roadmap for today. First, the trucking reality check. Second, decoding DOT and MC numbers. Third, essential filings and compliance. Fourth, the insurance hurdle. And finally, surviving the first year. All right, let's jump right into section 1, the trucking reality check, the nightmare scenario.
I really want to anchor on this hard truth right out of the gate. Starting a trucking company sounds incredibly exciting, right? The freedom, the potential revenue, finally being your own boss. But that excitement can vanish in an absolute instant. Why? Because simply buying a truck, getting a DOT number, and finding a dispatcher absolutely does not mean you can legally operate. The reality is, so many new trucking companies fail right at the starting line.
Let's play out a real-world nightmare scenario, okay? Let's say on day 1, you buy your semi-truck, and you sign with a dispatcher, fully expecting to haul by Monday. But week 1 hits, and your insurance filing gets delayed. The government won't activate your authority. Boom, you are completely grounded. Fast forward to week 3. Your authority is still inactive, your first massive truck payment is suddenly due, you have absolutely zero revenue coming in, and the financial pressure is already immense. This is a devastating financial cascade. And the scary part is, it happens to eager owner-operators constantly.
So, moving on to section 2, decoding DOT and MC numbers, the ID versus the permission slip. To avoid that exact nightmare we just talked about, we got to get our terminology straight, because people mix these two up all the time. Your US DOT number is basically just your safety tracking ID. The government uses it to track your inspections, your safety records, and your crash history. But having an ID doesn't mean you can actually work. That's where the MC number, your motor carrier number, comes into play. Think of this as the actual legal permission slip required to haul interstate freight for payment. You can have a shiny new truck and a DOT number, but without that MC operating authority active, brokers will reject you flat out and you cannot legally haul a single interstate load. Which brings us to section 3, essential filings and compliance, the alphabet soup. So here's kind of the basic step-by-step framework we're looking at. Step 1 is creating your business entity, like an LLC or a corporation, to separate your personal liability. Step 2 is applying for your DOT and MC numbers through the FMCSA's Unified Registration System. But Step 3 is where the vast majority of new carriers hit a solid brick wall. The FMCSA strictly requires proof of insurance before they will ever flip the switch to activate your authority. And trust me, the bureaucracy here is completely unforgiving.
See, you don't just buy insurance and call it a day. Your insurance company has to formally prove it to the government. That proof is what's called the BMC91 filing. It's a mandatory document proving your primary liability coverage is active. And here is the huge catch. You cannot upload this yourself. No way. It has to be submitted directly by your insurance provider to the FMCSA. Without this exact document filed correctly in their system, your authority stays entirely inactive. It's an absolute gatekeeper.
And right alongside the BOC91 is the BOC3. This stands for Blanket of Coverage. It's a required filing that designates legal process agents in every single state who can receive legal documents on your company's behalf. Now, the crucial point I want to make is this. There is a huge trap here. A lot of people just assume their insurance agent does this for them. Actually, scratch that. Almost everyone assumes it. But they don't. You typically have to hire a third-party process agent service to handle the BOC3. Miss this step, assuming someone else did it, and once again, your authority is going absolutely nowhere. But wait, because there is even more alphabet soup coming your way. It literally never ends. You also have to handle your Unified Carrier Registration, or UCR, which is just a yearly fee based on your fleet size. You must enroll in a drug and alcohol consortium for random testing. You got to register yourself and your drivers with the FMCSA Clearinghouse to track any drug or alcohol violations, and you must install electronic logging devices, or ELDs, to strictly track your hours of service. Ignoring literally any of these non-negotiable compliance hurdles leads straight to roadside violations, hefty fines, or getting your authority completely blocked.
And look, even if you manage to navigate all of that setup, the scrutiny doesn't stop. Within your first 12 months of operation, you are going to face the FMCSA new entrant safety audit. They will thoroughly review your safety records, your driver logs, your insurance, and your compliance systems. This means you aren't just setting up to pass the starting line, you are setting up to be heavily scrutinized for your entire first year. Poor preparation here can result in immediate violations or, worse, having your hard-earned authority fully revoked.
All right, let's get into Section 4, the insurance hurdle. Prepare for sticker shock.
$750,000. Seriously? Let that massive number sink in for a second. That is the general freight minimum for primary liability coverage required by the FMCSA, just to get in the game. This protects against bodily injury and property damage you might cause to others. And if you are looking to haul hazardous materials, that requirement can suddenly jump up to anywhere from $1 million to over $5 million, depending on the material. But what does that massive coverage requirement actually cost you out of pocket? As a brand new authority, your yearly insurance premium is typically going to range from $15,000 to over $40,000. Just let that harsh reality settle in. Depending on your state, with places like California and New York often costing way more, your cargo, and your operating radius, you are looking at a colossal upfront expense before you even put the key in the ignition. So, it begs the obvious question, the one every aspiring owner-operator yells when they see those premium quotes for the very first time. Why on earth is first-year insurance so incredibly expensive for new trucking companies?
Well, think of it from the underwriter's perspective. Insurance companies view new authorities as a dramatically higher risk. Why? Because you have absolutely no established safety history under that new MC number. You have no operating history to prove you run a safe business. And statistically, brand new authorities have a much higher claim frequency. Because they don't have company data to go on, underwriters have to base your rate heavily on your personal CDL experience, your driving record, the type of equipment you use, and exactly what and where you are hauling. Without an operating track record, you represent a massive statistical unknown. And let me tell you, the insurance industry prices unknowns very, very high.
Oh, and remember that primary liability we just talked about? That just covers damage to others. That's what the government wants. But while the FMCSA might not universally mandate federal cargo insurance, you practically cannot secure loads without it because it's what the brokers want. Brokers typically demand $100,000 to $250,000 in cargo insurance to protect the actual freight you are hauling. Plus, if you finance your truck, your lender will absolutely force you to carry physical damage insurance to protect the truck itself from collision, theft, or fire. So yeah, the costs stack up incredibly fast. Finally, let's wrap up with Section 5, Surviving the First Year, Avoiding Fatal Mistakes. These are the literal traps that end businesses before they even get going. Mistake number 1 is buying the absolute cheapest policy you can find, which usually comes with terrible service and hidden exclusions that leave you completely unprotected. Mistake 2 is totally underestimating the massive down payments required. I mean, many new carriers simply drain all their cash just turning the insurance on. Mistake 3 is using the wrong cargo classification, which can completely void your coverage during a claim. And the deadliest mistake of all? Missing a payment. If your insurance cancels, the FMCSA's system is pinged automatically and your authority is deactivated almost instantly. No warning, just shut down. Which really brings us to the core takeaway of this entire explainer. Starting a trucking company is not just buying a truck and finding loads. It requires a fundamental shift in your mindset. You are moving from being just a driver to becoming a compliance manager. It is about building a fully compliant, highly regulated transportation business. Your authority setup and your insurance are the absolute foundation of the whole shebang. Smart startups know this. They build reserve capital, they deeply understand these insurance requirements, they verify their filings quickly, and they never ever rush the setup. Proper planning and strict compliance are your actual keys to long-term survival in this industry. So I want to leave you with a provocative thought. Look at your business plan right now. Are you truly prepared, both financially and legally, to survive the inevitable setup delays, the complex filings, and those massive first-year premiums before you make a single profitable run? Because the truth is, anyone can buy a truck. Mastering the alphabet soup of compliance is what makes you a true trucking business. Thanks for joining me on this explainer, and good luck out there on the road ahead.